I'm Julie Cosgrove with Keller Williams Realty, and I'm joined today with Dion Jacobo from Capital Funding Group. Dion, thank you so much for joining us. And Dion comes to us with 20 years experience in the real estate industry and financing. So today our topic is going to be about real estate financing. So Dion, let's talk a little bit about when I first get a client. The first thing I do, obviously, is bring them to you to get pre-qualified, because our most important thing we need to find out up front if they're credit worthy. So let's talk a little bit about that, what somebody needs to have what they have to have their credit score be.
Well, we would like to have a 640 credit score, of course, because that gives you the premium interest rate. We can still do loans under 640, but we need to look at the whole situation because of the score being under 640. We can actually get and work on your credit report and get it up, try to get it up, pay off some credit cards, open some credit cards, whatever we need to do to get that score moving upward again.
Great. So what if somebody does have poor credit and it's out of the scope of what you do? What are some of the things that you can do to get their credit score up?
Well, I'll ask them when we look at it and go through the report together, is if maybe they have several credit cards that are too close to their limit, maybe they have no credit cards. So 35% of your credit score is on revolving credit. So we have to figure out how we're going to work that to get that score moving upward.
Great. So some of the things that Dion can't do that are out of her scope of being able to repair credit, I do have a credit company that I actually work with to help my clients get their credit score up. Now this might be a little bit longer process, but in the long run it's certainly worth it, because the last thing we want people to do is to try and go in and repair their credit themselves, because they don't know exactly what they're doing. For example, if somebody were to just go in and pay off a debt, go ahead and let's talk a little bit more about that.
Well, paying down the debt, you really want somebody to look at it that knows what they're telling you to do, because either you're going to pay it down, pay it off, close it. You don't really want to close any revolving accounts when you're trying to move your credit score upward. So this is where you really need to have some counseling on how to do this.
Right. So with that being said, please make sure you call me or call somebody that is really credit worthy, because we don't want you just to go to a quote credit counselor that's going to help you put in tons of money to pay off your debts. That's a different story. That's getting your debts paid off. We want you to go to somebody who's going to help you boost your credit score up. So please make sure you do get the correct credit counseling to be able to purchase. And that could take anywhere from 6 months to possibly a year, but it's still going to help you have a goal to go forward. So Dion, let's talk a little bit about somebody who has had foreclosures and or a short sale. This is right now, I think, probably one of the biggest challenges we have in our market today is people who've already gone through the process and are trying to repair their credit and are getting ready to buy. What happens if somebody does have a foreclosure or a short sale?
Well, if you want to go back to an owner-occupied home, then you're looking at 3 years from the date that your old property left your name. So you have a waiting period of 3 years from that date. So you're going to definitely want to look and see what date that property came out of your name, and that's where your waiting period starts.
And is that the same with investors, Dion?
No, it's not. If you've had a foreclosure and you want to go forward with new houses on a conventional loan, new investment properties, you're looking at a 7-year waiting period from the date it's left your name.
So if that same person, if they had investment properties and they're looking to purchase a principal residence again, then it reverts back to the same principle. They still have to wait the 3 years.
3 years, yes.
Okay, good. Thank you for clarifying that. So let's talk about somebody. Let me just share a story with you so we can get some more clarification, because I think this has been one of my biggest challenges, is somebody who's had a bankruptcy and they declared their home or property in a bankruptcy. I had a client who had 2 properties that she ended up letting ultimately go to foreclosure, and when she was going to purchase something else, she had declared one of those properties in her bankruptcy, and she thought because she declared it in her bankruptcy that once the bankruptcy was discharged, she was now relieved of that debt. So go through and let's talk a little bit about that when you're looking at it on the real estate financing side.
This is a common question, because a lot of people that do let their houses go into foreclosure also file bankruptcy. However, even though that property is included in your bankruptcy, the rule's still there. It starts 3 years from the day it leaves your name. So it doesn't matter if it's included in your bankruptcy or not.
So I just want to encourage you that while you're working along with your attorney, please take the time to work with a realtor who knows what they're doing and start the short sale process. Don't let your home go to bankruptcy and foreclosure, because it will affect your credit score differently. When a house goes to foreclosure, it is reported on your credit report as a foreclosure. So not only are your future job or employment it's on all your applications that you have to fill out. Somebody who's looking to seek new employment, that is one of the questions that is asked on the application. Have you ever filed a bankruptcy or had a foreclosure? And your answer has to be yes. Now, if you let a home go to short sale versus a foreclosure, you can say no, because you're not lying. Your home is going to be reported on your credit report is paid less than the amount owed. So please make sure when you are doing the bankruptcy, that you're also working hand in hand with the realtor to get you through that process. So Dion, let's talk a little bit about a bankruptcy. So if somebody doesn't have a foreclosure or a short sale, what's the time period they have to wait for if they have a bankruptcy?
For an owner-occupied government loan, you're looking at 2 years, a 2-year waiting period from the discharge date. Now, if you want to go back into a conventional loan, you're going to go back, it's a 4-year waiting period.
Right. So with that being said, once they do have that discharge, it's very important at that point in time that they get their credit score up. So they may have got rid of all their credit cards and gotten rid of all of that stuff. What happens to their credit score at that point in time? Have all those credit cards been taken off of their credit report?
No. The trade line on your credit report stays there for 7 years from the date of last activity. But what happens if you haven't opened any new credit, your score is just going to stay there. It's not going to move upward at all. So you have to do different techniques to get that score moving again.
So, okay, so that's again when we want to get you into the right counseling, to be able to have you work with somebody like Dion to get that credit score up. It's very important. Let's talk about now first-time home buyers. They're actually probably my favorite to talk about because they're new, they're excited, they're getting in their first home. What kind of financing is out there right now for the first-time home buyer?
Most typical financing we have right now is FHA 3.5% down. Do remember that you will need a little more money than your 3.5% because you are going to have some closing costs if the seller doesn't agree to pay your closing costs. On the FHA, also remember you do have to have a 2-year history of work. 2-year employment history is very important. Gotta have that. If it's less, it's like 1.5 years, they're going to make you wait until the 2 years.
Very important. Great information, Dion. And what about an investor? How much are they looking at for a down payment?
25 to 30% down.
25 to 30% down. And what kind of loans are typically out there right now as far as are there other government programs available?
Yes, there's the VA, there's a USDA, and there's also city and county programs. So you will want to ask your real estate agent, ask your lender about those special programs if you do qualify.
Right. And is there anything that we've forgotten, Dion, that is important to share today?
The gift. On the FHA, you don't have, the money does not have to be your own money. You can be getting gifted from a relative. It can come from a 401k. So it's not like you just have to sit there and save your 3.5%. There is other ways to get your 3.5% down payment.
Now, what I will tell you this is, because this has also happened, so we've got to share stories, things that have happened to us. So when people think they're going to get a gift, they sometimes the parents say, here, I'm just going to put the money into your account, show it. That's not necessarily the right thing to do, is it?
No. Before you get a gift from your relative, please talk to your lender, your real estate agent, and ask them how to move that gift correctly, or you'll have to go back and redo the whole thing again.
One of the things we don't like anymore is mattress money. That used to be the great way to be able to buy a house. People would save all their money, they'd stick it under the mattress, save it, and then all of a sudden this money is showing up in their bank account. We don't do that anymore. So is there anything else, Dion, that you can think of that we need to share with our audience today?
Well, one of my biggest problems is cash deposits going into your bank account. I will need 2 months bank statements, and I have to highlight all deposits if they are not payroll deposits. Then I have to track them where that money came from. So please do not put, if you're going to go into the process and start looking and buying a house, do not put large cash deposits into your bank account.
Right. So, Dion, I just want to thank you. And if you are in a position today that when you want to buy your first home, please don't hesitate to contact me. If I can't help you, I will find somebody who can. But also, it's really important because I've made it a goal and a practice over the last few years in this horrendous real estate market to help people make the right decisions about what they should do with their properties they currently own. So please, I just want to encourage you, get the right counseling. Call me. If I can't help you, I will find somebody who can. I work very closely with lenders, accountants, and attorneys to be able to help answer your questions. So thank you again, Dion, for joining me. My name is Julie Cosgrove. You're watching It's All About Me, helping you. Please give me a call at 866-485-9641 or email me at jcosgrove@kw.com. Dion, how can people get a hold of you?
My phone is 209-473-7200, extension 11. Thank you.
Thank you.